Welcome to the Rent Estate Podcast, a conversation on how you can achieve retirement security, financial freedom, and the new American dream through rental property investments. And here's your host, Kevin Ortner, CEO of Renters Warehouse.
All right, welcome back. This is episode number 7 of the Rent Estate Podcast. I'm your host, Kevin Ortner, CEO of Renters Warehouse. Thanks for being here. On the Rent Estate Podcast, we're really talking about gaining financial freedom, independence, retirement security using single-family real estate investments, and really trying to talk to successful real estate investors, property management professionals, and people in the space that hopefully have some great nuggets that we can mine for some of that gold, as I always say. And whether you're a new investor or a seasoned investor, hopefully you can walk away with some great tips and tricks and some information. So for those tuning in for the first time and might not know me or Renters Warehouse, I've been investing in real estate for 18 years personally, and have been helping others do the same for over a decade now. And Renters Warehouse exists really to be a guide for those who are seeking financial independence and financial freedom. And we believe that all investors deserve a partner who can help them execute on this type of investment strategy with ease and cut through some of the confusion and the complexity that can come with it. It's really with this mindset that we've created a process that's helped over 50,000 real estate investors across the country, and we now manage over 22,000 homes, making us the largest real estate investment company in America. So with that, my goal really with the podcast, like I said, is to share those success stories to help people avoid the pitfalls, the lost time, the frustrations and headaches that can come with investing in this type of asset class, because it can be challenging at times. And we want to be able to pass along some of the information, maybe some of the pitfalls others have seen in the first place, so that you can avoid those if you're listening. So that's the goal. Today, really, really excited. We have our first real estate investor. We've been talking to a lot of property management professionals, and one of my goals for starting the podcast in the first place was really to bring in true investors, people who are out there in the field doing this. Like, I talk about it all the time, and we talk about our theories and our philosophies, and I do it, but it's always great to hear from another person's point of view, how they got started, what they did, how they're growing, all that kind of stuff. And so today we have Matt McKinney on the show, and Matt and his wife have been investing in single-family rentals for about 8 years, and they've grown their portfolio to 5 properties, which is awesome. We have tons and tons of clients who have 1 or 2 and aren't quite sure how to make that next step, or frankly, just getting that first one can be really challenging. And so I'm really excited to hear your journey, Matt, and learn about what you have to do. So lots that we can learn from Matt. So thanks for being here. We really appreciate it.
Glad to be here.
So why don't we start out? I'm sure most people probably don't know who Matt McKinney is, who are watching. So why don't you tell us a little bit about yourself?
So Matt McKinney, I'm originally from a small town in western Iowa, Harlan, Iowa, about 60 miles east of Omaha. Went to school at Iowa State University, got a construction engineering degree. After I graduated, I went to Kansas City, worked in construction for 2 years before I moved up to Minneapolis, which was 2001. Married to my lovely wife, Michelle, for 15 years. We've got 2 kids, Anna, who's 13, and Will, who's 11. So I've been continue working in construction, commercial constructions for about 20 years.
Most important question, I think, of the day is, who are your teams, sports teams? Because I see the flag flying.
So I think Nebraska Cornhusker football all the way.
Yeah, Nebraska fan. So I know Matt outside of real estate. And if Nebraska's playing, Matt's watching.
That's true.
It's very important.
That's true. It's very distracting for my family.
It is.
I'm sure you know.
We have we've been out on the lake before on the boats. We've got some boats, and we'll hang out. And Matt has literally gone to the dock, gotten off the boat, gone in and watched the football game. His wife comes back out on the boat, hangs out with the rest of us, and then Matt returns after the game. If you win. If you don't win, you don't often come back.
That's true. I just bury my head in the sand and hope to avoid that.
Yeah, so Nebraska, that's important. I'm glad we got to mention that on the show. But back to the topic at hand, how did you get started investing in single-family rentals? Kind of what's the backstory on that? It's something that I'm obviously passionate about, believe that everyone should be investing in and having it be a part of a well-diversified portfolio, but not everybody does it. So what brought you to it?
So I think my background to it is probably a little bit unique.
Mm-hmm.
The recession years of 2008, 9, and 10, I worked for a realtor who worked with a developer out of Minneapolis to buy and sell foreclosed homes.
Okay.
So their goal was to flip about 100 homes a year.
Okay.
So at the time of purchase, the agent and I would walk the house. We'd figure out what the remodel scope was, see if the estimated costs worked with the acquisition price. Purchase the home. If the numbers worked, then we had a stable of general contractors that we worked with because we had 8 to 10 houses under construction all the time. So I would help manage that process. We tried to limit the construction to about 30 days to get the house back on the market as soon as we could. 30 days later, if everything went well, it'd be back on the market. We make the profit that we would hope to make and move on to the next one.
Yeah.
So it was during that process that the guy, actually the realtor that I worked for, had 10 properties, single-family properties that he rented. I learned more about what he did and some of the benefits, for what he was doing.
Yeah.
So in 2011, we purchased our first house. We actually purchased 3 that year.
Big year.
It was a big year. Yeah, it was a big hurdle to overcome. My wife, she's very conservative with her investments. We save as much as we can investing for our retirement, but everything that we saved, every 401k, funds that we invested in, everything was tied to the stock market. So diversity was really the appealing reason for us to try something different.
Right.
And it just happened at the time that I had the right connections and the right experience to be able to do this.
Makes sense. So you had someone who had been working in the space. You obviously worked in the space, but the guy you were working with had some rentals, so you obviously learned a bit about it.
I did.
And you brought this idea home.
I did.
To Michelle and said we should do it. How did that conversation go?
It's a little bit of pushback. Actually, probably quite a bit of pushback at first.
Yeah. I
think part of it was just getting used to the idea.
Right.
I think we were lucky that we knew the right people and that we had, especially from a remodel standpoint, that we had people that we could trust to do whatever remodel work we thought we would need to do if this was going to work.
Right.
So I think getting used to the idea was the biggest obstacle to overcome.
Yeah.
Once we got used to it, it wasn't as hard to pull the trigger, but it seems like a big thing to take that step, that first step, and buy a house.
So I have a philosophy that I've talked to a lot of people about that I have no data to back up whatsoever, but it's a little bit of intuition. I think getting someone over the hump to buy their first rental investment, I think is very challenging. We just talked a little bit about that, and you were maybe more convinced than your wife to start because you're in it, right? And you brought the idea home. But I also believe getting someone to buy their second is almost as hard as getting them to buy their first, because I think when you buy one, you're like, okay, I got a house, I can deal with this, is fine. But when you get two, you're starting to get a little longer in the investment, and now you're really becoming a real estate investor, right? Instead of maybe a hobby kind of thing. Was that your guys' case, or once you had one, you guys were good to go?
I think the first one opened up the idea, and I think once we got through the remodel process and we got it rented, and then we looked at the forecast, assuming the tenant was good,
right,
the house cash flowed, it didn't seem as hard as we thought it would have been.
Okay.
So I think really getting the first one, I would say, was the biggest.
Yeah, big challenge, right?
And then,
a big hurt, just a mental mindset kind of hurt a little.
And then they got easier after that. I suppose it's kind of like having kids. Once you have the first one,
right?
Maybe number two, I
think, is a little bit harder. But once you have two, then what's 5?
Yeah, then what's 5?
Right.
Right.
In the case of kids, what's 3? Maybe not 5, but okay, that's cool. So that's super interesting, and that is, I think, why the show can be so powerful. Is people watching, thinking, or listening, thinking, I want to get into this, but I just don't know if it's right for me, or I don't have any experience in it. Now, you had some experience in it, so that's a little bit different. But you didn't grow up in a family that was investing in real estate.
No, not at all.
Like.
No,
so
not at all.
Kind of the first one.
The first one.
Right. And proves that, you just have to get over that kind of mental mindset. Do your research, do your homework, build the right team of people. You had the team built just from your days in the industry, right? But building that right team and then plunging forward and doing it, I think is super important. So that's the how. That's the story of why I got there. But so what's the why? Why are you guys investing in this in the first place? I mean, sounds like for retirement? Are there other reasons, or why is this an attractive investment for you guys?
So yeah, I touched on it. The biggest thing is the diversity of it.
Right.
Not having all of our eggs in one basket. We know that once we get to retirement, we're going to have an income from it, not touch the asset. That's really attractive.
Right.
It's real estate, so property maintains its value. It's actually a pretty safe, we feel like it's a pretty safe investment. Minneapolis area, we know property values grow.
Right.
Year over year, you factor that into the overall investment. It turns out if you look at your return on investment, I think it outperforms the 7% that you can expect in the stock market.
Well, especially in today's day and age here in 2019, it feels like a nice, safe, secure investment. I mean, the world we live in today, the president makes a tweet and the stock market goes down 800 points, right? So fortunately, the real estate market's a little bit more stable than that. And I think what's important for people to remember, and I'm sure you guys have thought a lot about this, you bought in the recession, the real estate downturn, and like all markets, real estate's cyclical, although I think real estate is less cyclical than the stock market. If you look at the 20 or 30-year historical chart of real estate pricing, the only real major dip in 30 years is in 2010, 2011, 2012, like big, right? Otherwise, it maybe levels off, goes down a little bit, but it's always up and to the right for the most part. Mm-hmm. I think that probably continues to happen, but as long as you invest with that long-term mindset, like you guys have, young today, investing for retirement, even if the market does go down 5% for a few years, or heaven forbid 10% for a few years, so long as you don't sell the home, it's no issue, right? And so I think being able to ride that out over the long term, having that long-term investment philosophy is a lot better than trying to get in and flip them, right? One and done. If you miss the market, you're in trouble.
Right. Yeah, we plan to hang on to these forever. Hopefully, if things work out, we hang on to them forever. We ended up buying our 4th in 2015 and our 5th in 2017.
That's awesome. Are you guys going to continue to grow the portfolio, do you think?
So I think our goal is we'd like to get up to 10.
Okay.
We wish that we would be at 10 right now.
Nice round number, right?
Yeah. Well, in hindsight, everything's in hindsight,
Yeah.
But we wish, especially during those years, 2010, 2011, had we been able to buy a couple more, that would have been a great time. But like I said, we bought another one in 15. We most recently bought one in 17. We're still on the lookout to buy more.
That's awesome. 10 is a good number. I feel like 10's a nice number.
Yeah. Nice round.
And you're right. Hindsight is 2020. I wish I've been in the real estate industry. Well, I've been investing for 18 years and I've been doing real work in the industry for 10. And I don't know anyone who doesn't wish that they bought more real estate back in 2011, 2012.
Well, and I have no doubt 15 years from now, I'm going to be saying I wish in 2019 I would have bought 2 more.
That's such a good point that I make to people a lot. Again, obviously I get asked the question a lot of, when's the right time to buy? Should I invest now or should I wait a few years? Sounds like the market might slow down. Like, what do I do? And my answer is always the same. And I think it will always be the same for the rest of my life, which is, again, if you're investing with a long-term philosophy, not a short-term philosophy, now is always the right time to buy.
Yeah.
Because 15 years from now, to your point, looking back, we'll sit here maybe in the podcast studio, we'll see, and say, man, I wish I would have bought more homes when it was 2019. Right, or 2018 or 2020, whatever it was, because real estate prices on average are going up 3-4% a year. Extrapolate that over 15 years, it's a lot of value. And so the sooner you start taking advantage of the value, the better. Right. So I think that's a great point you brought up. So with that said, what are your biggest tips for people who are looking to get into this business of owning single family rental properties, and maybe they have one and they're looking at growing, or maybe they have none and they're doing their research, they're getting educated, they're watching the podcast, trying to get some tips. What are your tips for people out there looking to get started?
Well, I think it's, don't let the fear of it rule your decision for it. So I think it's a smart decision. You got to take that first step.
Right.
Once you do that, it gets easier.
Right.
It's a calculated risk like any investment, but it's real estate. So it's going to continue, the value is going to continue to grow over time. Find people you trust. So for us, it was, we worked with a realtor that we could trust. We found contractors that we could trust. We had a model that we trusted, for what the houses, where they were going to be, number of bedrooms, number of bathrooms, number of garage stalls. We actually have strayed from that. And my wife and I were just talking about this. Looking back, it was always a 4-bed, 2-bath,
Okay.
2-car garage that we were looking for. We probably should have strayed from that a little bit. It would have made things a little bit easier. And in the end, that house under a different model would still cash flow the same as the first 3 that we purchased that fit that model.
So your first ones were 4-bed, 2-bath, 2-car garage.
Yep.
That was kind of the original buy box, so to speak, right? The house you wanted. And then sounds like the last 2 were they bigger, smaller? What are the last 2?
They were smaller. The house that we bought in 2015, that was a 3-bed, 2-bath.
Okay.
2-car garage. And then the house that we bought in 17 was a 3-bed, 1-bath, 2-car garage. We always kind of had the resale in mind. What would it take? What's it if we wanted to get out of this quickly, what do we buy in order to do that?
Sure.
And we thought that the 422 model was good. That was a great backstop.
Yep.
I think once we got further along in the process, we realized that, we're not going to sell these anytime soon. Let's find something that will rent and cash flow, which was and is much easier than we thought it was going to be.
How did the 3-1 work out for you? One bathrooms I know can sometimes be more challenging to rent to some folks sometimes, but how's your experience been with that?
So that house we purchased in March of 2017. We had about a 30-day rehab, and I think we had at least within 30 days after that.
Nice. No problem. Same tenants still in it?
They were in it for 2.5 years.
Okay.
She got relocated to Las Vegas.
Okay.
So we rented in about a week.
Nice. So no problem.
So no problems, no.
That's great. Yeah, I generally tell people similar buy box, right? 3 bedrooms, 2-bath, 4-bedroom, 2-bath, 2-car garage, in a nice neighborhood. What kind of neighborhoods were you targeting? Did it matter for you?
Yeah. So my main stipulation, which I don't think this was Michelle's, but it might have been, was to stay off a busy street. Otherwise, we knew the suburbs that we wanted to be in. I think based on our experience and people that we knew which areas would rent fairly quick. Nice neighborhoods.
Yeah, kind of similar places you'd want to live, right?
Yeah.
Is what I always target. It just makes it easier. You're going to find great tenants, great families,
and for us,
and rent it quick.
Yeah, and for us, we wanted to make it a nice house, so we didn't want to not give a family that wanted to live in the house something that they needed.
Right.
So we invested the money that we thought it would take to be able to rent the house quickly and to make the house nicer for whatever tenant was going to be there.
Yeah.
Which I think was the right approach because we've been able to rent and maintain our tenants for, the first house that we bought in 2011, we've had the same tenant there.
That's awesome.
We've had 30. I put this together before I came to see you.
Yeah.
So of the 5 houses, we've had 30 rental years, which I have a hard time believing 30 rental years. But we've had 15 tenant groups within those 30 years.
Wow.
We've had 2 houses that have turned over about every 18 months. We've had 2 houses that have been consistently rented to one tenant for the duration. We've had groups of tenants that somebody would move out and then that tenant would find a replacement.
Yeah.
So it just keeps cycling.
Yeah. What of the properties you mentioned that you've had 2 tenants that have been there the entire lifetime that you've owned the property? Were those 4-bed, 2-baths, or were those different?
The first one was a 4-bed, 2-bath,
Okay.
and it was a family of 5.
And tenant's still there?
Tenant's still there.
Okay. What about the other one that's there from the beginning?
That is the 3-bed, 2-bath.
Okay.
And
I was just wondering if it was going to match up with your early philosophy on the 4-bed, 2-baths.
No, I think if you find the right group, it doesn't matter.
For sure. I had a tenant in one of my properties down in Phoenix for like 7 years, something like that. It was the home I left when I moved back to Minneapolis, and it was awesome. It's great. Long-term, keeping the homes occupied, low tenant turnover is such a key to this business.
Yeah, it is. If you can limit the turnover, and even from a time management standpoint, probably the most time-consuming part for me managing this process now is to find the right tenant and to go through the process where you're showing houses and writing contracts, writing leases, and working out details and setting up payments. And if you can limit that turnover, then your time ahead,
Saves you
money
time
ahead.
and money, right?
Yep.
That's interesting. So you bring up a good point. You manage all your homes yourself, and you've got 5. So you're a do-it-yourself landlord. A lot of the folks watching and listening are do-it-yourself landlords. There's a lot of them out there. What are the biggest challenges that you've found, or what should people be watching out for if they're going to manage their homes themselves?
So I would say the first biggest challenge is to find the right, if you're going to remodel the house or if you've got any work to do to it, you need to have people that you can trust.
Right.
So we have, through my experience during the recession, I still have contractors that I can use, that I can depend on. I've also found other contractors along the way. So being able to manage the remodel and any repairs that come up, you've got to know the right people, find the right people that you can trust. The second biggest thing, and maybe this is the first biggest thing, is finding the right tenant.
Yep.
So what we try to do to find the right tenant, we try to find what the market value is. We don't try to be greedy. So we find the true market price, or what we think the true market price is, and then we price it just under that. So we want to find a pool. We want to widen our pool of people. We want to give the potential tenant the right time to make the decision. So we're not trying to re-rent things within 2 weeks. If we know somebody's going to move out, then we try to get in front of the process.
Right.
Because people that are organized, and probably the tenants that you more often want, are the people that start looking for their next place to live sometime before 2 weeks before they're actually moving.
Right.
We've gone through a couple evictions, so those were early on, and I think we learned from those evictions. I think we honed our tenant finding process.
Those are the lessons you took from your evictions. Is probably goes back to the tenant, finding the right tenant in the first place.
Take your time finding the right tenant. Make sure you get the right applicants, or get the right pool of people.
The tenant is so important to this, right? We talked about keeping the tenant in place and limiting turnover and all that kind of stuff. And if you listen to anything I put out, you'll hear me talk about it all the time, which is this all starts with finding the right tenant. Right. Finding that right tenant up front. The first time, it makes the management, the day-to-day, month-to-month management so much easier. And it's just going to make the asset perform so much better. And so spending an extra 2 weeks finding the right tenant, not taking the first one that comes across, actually doing some background research on those tenants, things like that, is hugely important.
It's a great investment. Yep.
Right. Yeah. Great investment in time. Right. So focus on the tenants. For folks out there managing their homes themselves, focus on your tenants. Take your time, find the right tenant. That's going to be a game changer for you. And then I also heard you mention build the right team. Make sure you have the right team in place.
Right.
I love hearing that, because it's something else I talk about all the time. And it may not just be contractors, right? It could be accountants. It could be tax professionals, to make sure that you're taking advantage of all the tax benefits that come with owning real estate. It could be a real estate agent you need to work with. I think you've got that figured out because you used to work with one. Or it could be your property management company. But knowing who you want on your team, vetting that team and building it kind of before you jump in, I think is a great tip.
Also making sure that you're budgeting for things in the right way. So it's a business. You have to run it like a business. You have to know what your income is, what your costs are, what your taxes are. You have to anticipate a certain amount of maintenance through the year.
Right.
So having that money set aside, not touching it, security deposits, same way. That money's not for us, it's for the business. So we have a pool of money that holds the security deposits. We build that account monthly. We're paying back our loans.
Yep.
But then we're not taking any payment until we have the houses paid for. We won't take any income from this.
Right.
So we build the pool of money that we have. So if anything comes up, we can take care of the problem. There's never a cash flow issue. There's never money that comes from our pockets personally. The money's set aside and it's managed like a business.
That's awesome. That's a great tip for everybody. So pay attention to that one. Run it like a business. I talk a lot about running your rentals like a business when it comes to just managing them, and whether it's rent collection and, doing the hard work of sometimes being the bad guy, or maintaining the home, or investing in them, whatever it is, running it like a business, but really truly looking at it from a financial aspect like a business. as a great tip for people. I think where real estate investors, especially new investors, can get into trouble is they're looking for that cash flow from day one. Like, hey, I'm gonna find a home that cash flows $400 a month. That's great, and they're taking it and spending it, and it's their money. They rightfully can do that. But then when the air conditioner breaks, they're scrambling,
right,
trying to find the $3,500 to replace the air conditioner, right? And so you guys sound pretty disciplined around ensuring you've got a reserve fund set up, and maybe any extra money that's above and beyond the reserve fund, you guys are paying down the loans faster.
Right.
That's awesome.
Yeah. So actually, we got our loan for our first house, 2011. That's paid off.
Nice.
So we've taken the money that we used to pay that loan. Now we're doubled up on the second house. So that'll be paid off in a couple years. Then we'll take those 2 house payments, roll them into the third, pay off that one quicker.
Sounds like a Dave Ramsey strategy for housing.
It probably is. The long-term goal is to get the houses paid off for retirement and start taking income then.
Yeah.
If it works out where we can take income before that, that's great.
Right.
But we're not going to do that until the debt's cleared.
That's awesome. Good for you guys. That's great. Well, I think that's about all the time we have today. Thanks so much for joining us, Matt, coming on and really sharing your story and your experience with us and the listeners. I think there's a lot of great information inside this podcast. So re-listen to it, rewatch it if you have to, pull out some of those notes. And if you enjoy the podcast, please support us by subscribing to it, comment on it, share it with your friends, your family, like it. That's how we grow the following here, and that's how we really grow in our mission to help people learn about this asset class and learn how to continue to invest and become financially free through real estate. So thanks for watching. And if you're looking for help with your real estate investments or making a real estate investment plan, you can check out renterswarehouse.com, give your local office a call, submit a question on the website, and an advisor will reach out to you right away. So thanks for checking out the podcast, and we'll see you next time.
You've been listening to the Rent Estate Podcast with your host, Kevin Ortner. If you enjoyed today's show, head over to rentestate.com for a free rental property analysis and learn how you can list, invest, and rent all under one roof.